Welcome to the Deep Dive. Today we're taking a close look at Tesla. We're digging into their first quarter 2025 results, the Q&A webcast.
Right, and we're also pulling in some outside views. There's a CNBC report on Q1 deliveries and a YouTube take on the stock itself.
Yeah, exactly. So the mission here is to really pull out the crucial insights, figure out what they mean for Tesla, and the broader industry.
Yeah, we've got a good mix. We'll hear directly from Musk and his team on the earnings call. Then there's the news analysis looking at those delivery numbers.
And the financial commentator sort of weighing the stock moves against the company's fundamentals. Should give you a pretty well-rounded picture.
Hopefully, yeah.
Okay, let's jump right in. Elon Musk's opening remarks. He mentioned spending time with the Department of Government Efficiency, DOGE, he called it. What was that about?
Yeah, interestingly, he framed that work as being about tackling the national deficit, finding and cutting out waste and fraud in government spending. A big goal.
Trying to improve the country's finances, essentially.
That was the pitch.
And sounds like that didn't exactly go smoothly. Some pushback.
Right. He talked about getting blowback, even protests. He seemed to think it was coming from people receiving what he called wasteful dollars, or maybe fortunate dollars.
So connecting the protests directly to his efficiency efforts?
That was his take, yeah. He felt it was a direct consequence of, trying to tighten the belt.
But now it sounds like his focus is shifting back more towards Tesla.
That's what he indicated. He said the initial setup for DOGE, getting the team and processes in place, is mostly done. So starting next month, May 2025, he expects to spend significantly less time on government stuff.
How much less?
Maybe just a day or two a week for the rest of this administration, kind of overseeing things. So yeah, a big shift back to Tesla operations.
Okay. And moving to Tesla itself, how did he describe the company's current state? Was there any sense of crisis?
No, he was quite clear on that. He explicitly said Tesla is not in a near-death situation right now.
He acknowledged they've had those moments in the past, though.
Oh, yeah, definitely. He referenced those past crises, the close calls, but he emphasized this isn't one of them. He did say, expect some unexpected bumps this year.
Right.
But overall, still extremely optimistic about Tesla's future.
And that optimism, it really seems tied to his long-term vision, doesn't it? What are the key parts of that again?
It really boils down to two main things. First, getting to large-scale autonomous cars. And second, deploying huge numbers of useful autonomous humanoid robots. Optimus.
Right, Optimus.
He stressed the, just staggering potential value of a company that pulls that off, especially at scale and low cost. He basically repeated his belief that Tesla could become the most valuable company globally.
Even more valuable than, what, the next 5 biggest combined, potentially?
Yeah, that's what he suggested, yeah.
If they execute well.
Wow, okay. And did he give any timelines? Especially for the autonomous ride service?
He did. He mentioned expecting to launch fully autonomous paid rides in Austin starting this June.
June, okay, so
Right.
very soon. And financially. When does that start making a real difference? He thinks it becomes financially material around the middle to the second half of next year. And after that, he predicted exponential growth.
Exponential. Okay. Another big topic, especially now, is supply chains. How's Tesla handling that?
Yeah, they seem pretty focused on that. The strategy is basically localizing supply chains. So building stuff near their factories in America, Europe, and China.
Which helps with costs, obviously, and logistics.
Right, and it also makes them less exposed to tariffs. Now, he did acknowledge that tariff decisions are ultimately up to the U.S. president.
Of course.
But he reiterated his personal view that, lower tariffs are generally better for the economy.
Got it. There was also some talk about robotaxi versus cybercab. Can you clear that up?
Sure. So the way Musk explained it, any autonomous Tesla S3 XY could function as a robotaxi. It's like a generic term.
Okay.
Cybercab is the specific product name for their purpose-built autonomous vehicle, the one they're designing from the ground up.
Ah, okay. The dedicated one.
Exactly. But the key point is the autonomy system itself. They're building a generalized solution. So once it works well and gets approved in a few cities in one country, say.
They can roll it out much faster elsewhere in that same jurisdiction.
Precisely. And that's possible because of their approach using their own AI chips, camera-based vision, not relying on, super expensive LiDAR or needing high-definition maps for every single street.
Right, different philosophy there.
Okay.
Switching gears, slightly optimist, the robot. How's that coming along?
He sounded pretty bullish on Optimus. The expectation is to have thousands of them actually working in Tesla factories by the end of 2025.
Thousands by year end. That's ambitious.
And the longer-term goal is scaling production to millions per year, maybe hitting 1 million units annually by, like, 2029 or 2030.
Wow. Okay. And Tesla's not just cars, right? The energy business is a big piece, too. How's that doing?
Apparently, very well. Really strong. Musk highlighted their Megapack product.
The big battery storage units.
Yeah. He explained how they let utility companies basically buffer energy, which means they can get more total output from their existing power plants. It smooths things out.
So high demand for those.
Very strong demand, yeah. They're seeing orders for gigawatt-scale factories now, and the long-term vision there is massive scaling up to terawatt-level stationary storage.
Terawatt levels. Okay. Let's talk about Q1 specifically. It can be a slow quarter for car sales generally. What were the specific challenges for Tesla?
Well, Musk mentioned the usual Q1 stuff, winter conditions impacting sales. But the big thing this Q1 was the global switchover to the new Model Y.
They did that in all factories at the same time.
All factories, globally, simultaneously.
Yeah.
Which he described as, a major and difficult undertaking, especially since the Model Y is still the world's best-selling car. Over 1.1 million a year.
Yeah, doing that kind of transition on your bestseller everywhere at once, that would definitely impact things temporarily.
For sure.
And Musk wrapped up his opening remarks with a pretty broad vision, right?
He did. He brought it back to Tesla's ultimate goal, delivering sustainable abundance for all. And the key to that, in his view, is affordable AI-powered robots.
So using AI and robotics to create widespread abundance, but sustainably.
That's the grand vision he painted, yeah. Most desirable future, as he put it.
Okay. Bev, who we assume is Debate Nia, also gave some opening thoughts, focusing more on the operations side.
Right. Bev really emphasized the factory update achievement, doing that simultaneous global update for the Model Y within the quarter and hitting their timelines, called it unprecedented.
Okay, what else?
Also pointed out a record gross profit for the energy storage business in Q1, which is interesting given some other pressures.
And on the vehicle delivery decline.
Acknowledged it, yeah. Attributed it mostly to those planned factory shutdowns for the Model Y updates, which meant the new version wasn't available right away.
Makes sense.
She also mentioned some negative impact from vandalism and sort of hostility towards the brand in some places.
Interesting.
But despite the transition, the leftover inventory of the old Model Y still sold out in the US, China, and other markets.
So underlying demand was still there for the outgoing model.
Seems like it. She also talked up the updated vehicle lineup now and the benefits people are seeing from FSD Supervise, calling it a personal chauffeur, citing positive customer stories.
Right, focusing on the user experience there. Okay, let's dive into the financials a bit more. Margins, expenses. What did we learn about Q1?
Okay, so auto margins were down sequentially. Bev explained that was mainly due to fewer deliveries overall.
Right.
Less fixed cost absorption because of the factory downtime for the updates, and also lower revenue from regulatory credits.
Were there any offsets?
Partially offset by the pricing on the new Model Y. Meanwhile, energy storage, as mentioned, hit its highest gross profit ever, even though deployments were lower.
And services.
Services and other margins dipped slightly, mostly pressures from the used car business and their insurance arm.
Okay. What about spending? Operating expenses.
Those went up, driven mostly by big investments in AI Optimus especially, and also development costs for vehicle programs like Cybercab, Semi, and those upcoming affordable models.
But wasn't there some offset?
Yeah, offset somewhat by lower SG&A expenses, selling general and administrative costs.
Got it. And one last financial point.
Other income took a big hit because of mark-to-market losses on their Bitcoin holdings in Q1. That was a contrast to the previous quarter where they had gains.
The joys of crypto accounting.
Yeah.
Okay. Tariffs came up a lot. Bev went into quite a bit of detail.
Yeah.
What was the takeaway there?
Yeah, she really laid it out. First, she stressed Tesla's been working on regionalizing supply chains for years, pointed out the U.S. Model Y has been rated the most American-made car for 3 years running.
High USMCA compliance too, right?
About 85% for their U.S. lineup, yeah. Which helps a bit compared to others. But these upcoming Section 232 auto tariffs in May, those are still expected to hit.
How much?
Including Canada and Mexico, she estimated maybe a couple $1,000s per vehicle increase.
Okay, and the energy business impact?
That's actually hit harder because they source LFP battery cells, lithium iron phosphate, from China for that.
So what are they doing about that?
They're pushing hard to get local LFP cell manufacturing going in the U.S. and also finding non-China suppliers. But that takes time.
Right, and the China mega factory.
That'll serve markets outside the U.S.
Okay. And there was an interesting point about tariffs impacting capital investment, too.
Yeah, kind of counterintuitive. A lot of the high-tech manufacturing equipment they need has to be imported, often from China, so tariffs hit that too.
So even with cost optimizations, CapEx is still going to be high.
Expected to be over $10 billion this year, partly because of those tariff impacts on equipment.
Okay, a complex picture on tariffs. Let's move to the Q&A.
Mm-hmm.
Lots of interest in the robo-taxi launch. What were the key updates there?
Right. They confirmed again, fully autonomous, paid rides, Model Ys in Austin, still on track for June.
And then rapid scaling.
That's the plan. Scaling to many other U.S. cities by the end of this year. They talked about an S-curve adoption. Potentially millions of autonomous Teslas operating by the second half of next year.
Millions. Wow. Will they need different software versions for, say, snowy places?
They mentioned maybe localized parameter sets eventually as a refinement. But the core idea is a generalized solution. That's the advantage of their AI approach.
And they pointed to the China FSD rollout as evidence.
Exactly. How quickly they deployed FSD supervised there with relatively little local data. But the big challenge, they acknowledge, is validation, proving safety.
Especially those rare long-tail events.
Precisely. Which is why they need super sophisticated simulations, even using AI to generate video scenarios for testing.
And what's happening in Austin now?
They've got their QA fleet running constantly, gathering data, a convoy of Teslas, as they put it, reporting that critical interventions are rare now. And they mentioned those impressive videos coming out of China showing FSD supervised, handling really tricky roads.
Okay. What about the Cybercab itself, the purpose-built one? Any updates on its timeline?
Yeah, first big builds are expected end of Q2 2025, so about a year from now. Then large-scale equipment installation starts at Giga Texas in the months after that. Still on track for production next year.
And that's being built inside the existing Giga Texas?
Yep, alongside Model Y. Just emphasizes how massive that place is. 3 times the Pentagon, they said again.
Right. Now, the big question for many owners. When can they use FSD completely unsupervised in their own cars?
Yeah. Maybe not before the end of this year in the U.S. They're being really hardcore about safety, wanting it definitively safer than a human.
So robotaxi first, personal unsupervised later.
Seems that way. They expect several studies for personal use later this year, and Musk mentioned his asset test benchmark.
The sleeping test.
Yeah. Can you fall asleep and wake up at your destination? That's the goal for true unsupervised.
Got it. Affordability is always key. Any more hints about those cheaper Tesla models?
They confirmed, again, plans to release more affordable models this year. They're, working through the usual launch headaches.
But the ramp-up might be slower.
Maybe a bit slower than they'd hoped initially, pointing to sort of general industry turmoil. And the big constraint is using existing production lines.
Because they want full factory utilization.
Exactly. So that limits design flexibility quite a bit. The new models will likely look like current Teslas, but the focus is really on low cost of ownership, low monthly payments. That's the key differentiator they're aiming for.
Okay. How do they see their robo-taxi service stacking up against Waymo?
Well, Musk basically contrasted their approaches, pointed out Waymo's cars are much more expensive, low-volume production.
Whereas Tesla is aiming for low-cost, high-volume.
Right. And again, emphasizing their bet on pure AI with cameras, plus now adding audio for sirens versus Waymo's expensive sensor suite. He highlighted their in-house AI software and chip design teams,
suggesting they could grab a huge market share.
Yeah, because they already have this massive fleet of cars out there potentially capable of autonomy, plus the manufacturing scale. And crucially, the Model Y starting in Austin, they're just regular customer cars.
Just needing a software update.
Exactly. He even mentioned cars already moving autonomously within their factories from end of line to pickup. Said he's confident Model Ys will soon drive themselves right from the factory to the customer.
That's quite a picture.
Yeah.
What about this unboxed manufacturing method for the Cybercab? Sounds revolutionary. Updates.
Yeah, that's the key to the Cybercab's low cost and high automation. They're still working on the details, things like precisely joining big sub-assemblies, dealing with potential corrosion on uncoated aluminum, seam sealing.
Sounds complex.
It is. But they said early crash tests have been successful. The big test comes with those end of Q2 2025 builds. That's when they really see the whole unboxed process integrated. Test vehicles should be on roads a couple of months after that.
And they really see this as a game changer for manufacturing.
Totally. Called it a revolutionary system, unlike anything else globally. The factory is as much the product as the car.
And the goal is incredibly fast production.
The long-term goal is insane. 1 car every 5 seconds or less per line.
5 seconds.
Yeah, which they compared to a slow walking speed like 3 miles per hour. And they plan to bring some learnings back to existing lines, too.
What's their current best time?
Shanghai line is about 33 seconds. So this is aiming for like a 6 or 7 times improvement.
Wow. But it won't be perfect right away.
No, he cautioned the initial version might be like a C grade compared to the A+ of their best current lines like Shanghai. But the long-term potential is huge.
Okay. We talked about supply chains earlier, but how are they adapting specifically to global economic risks, tariffs, geopolitics?
Right, it's that regionalization strategy again. Part supply near the factories. North America, Berlin, Shanghai.
And the percentages are high.
Over 85% North American content for high-volume U.S. cars. Over 95% local content in Shanghai. Berlin is similar, except for batteries, which they're still working on localizing there.
And this strategy predates the pandemic.
Yeah, but it accelerated post-pandemic.
Okay.
It involves diversification, vertical integration, using analytics, local partnerships. It's a multi-pronged approach.
But they're not 100% immune.
No, definitely not. Lower volume models still have higher tariff risks, but their vertical integration is extreme. Building their own lithium refinery in Texas, a cathode refinery in Austin.
Which other car companies aren't doing.
Nope. They're also looking at anode production, maybe even anode-less batteries down the road. And for years now, they've been multi-sourcing every component from at least 2 different countries.
So building resilience layer by layer.
Exactly. Insourcing lithium in cathode is critical for battery independence. Their own cell production gives them, they claim, the lowest cost per kilowatt for cells bought in North America.
And regionalization helps with logistics too, right? Less stuck on ships.
Yeah, less working capital tied up, avoids port chaos, more resilience. They know 100% localization isn't realistic for everything, like specialized chips. So they work closely with partners, manage strategic stockpiles, while regional chip manufacturing gets built up.
And vertical integration goes beyond batteries.
Oh, yeah. Importing raw metal ingots and turning them into castings themselves, recycling plastics. They're even looking for alternative sources for rare earth magnets. It's pretty comprehensive.
What about battery supply constraints? Are those still an issue, especially with tariffs?
For vehicles, they say they're no longer cell-constrained. That's thanks to expanding U.S. production with partners, their own 4680 program, and localizing the upstream supply chain.
But tariffs are hitting the energy side.
Yes, the recent tariffs challenged Tesla Energy. But they say they anticipated this and have plans more sourcing options, plus their own in-house LFP production ramp-up.
Any internal challenges?
Just a minor one mentioned. Making sure the right cells get matched to the right battery packs efficiently.
Okay. There were rumors swirling about brand damage hurting orders. What was Tesla's response?
They pushed back a bit, highlighted how quickly all 4 factories ramped back up to previous Model Y rates after the upgrades, just 8 weeks.
Impressive recovery time.
Yeah, and noted that Tesla was still the best-selling car, not just EV in California in Q1, despite economic pressures and negative press.
And test drives?
Record number of global test drives in Q1, apparently. Suggests interest remains high. They acknowledged they aren't immune to macro demand shifts.
Of course.
But argued they don't see a specific drop in demand beyond those broader economic factors. And again, emphasized the focus on affordability.
Got it. Back to Optimus for a sec. The pilot line. Any tariff impacts there specifically? And where are the parts coming from?
Well, Optimus is still mostly R&D, right? Not big volume yet. Most of those thousands this year will come right at the end. And almost every part is new.
No existing supply chain.
Pretty much, except the Tesla AI computer. Motors, gearboxes, actuators, all new. Musk used an analogy. A complex product is limited by its slowest, unluckiest part times thousands of parts. Makes predicting the ramp-up really hard.
Any specific examples of hurdles?
Yeah, he mentioned needing export licenses from China for rare earth magnets used in the arm actuators because of potential military use concerns. They're working on resolving that.
Okay, turning to the CNBC report now. What were their key takeaways on Q1 deliveries and market share?
CNBC noted the 336,068 deliveries were below Wall Street forecasts, and that number was more like Q1, Q2 of 2022 levels, so a noticeable drop year over year.
What about Cybertruck?
They mentioned sightings in inventory lots, estimated maybe 6,000 to 7,000 U.S. deliveries in Q1.
And the stock connection.
Acknowledge the stock strength is tied to AI, robotics, autonomy. but said monthly delivery numbers still matter for the core business health.
Competition. BYD.
Yeah, it mentioned BYD is closing in, maybe surpassing Tesla in overall EV sales, but important caveat, a lot of BYD's numbers are hybrids, not pure EVs.
And Europe.
Reported significant drops in EV sales in several European countries. And even though the new Model Y Juniper is out there now, they haven't seen a big sales snapback yet.
And U.S. market share.
CNBC estimated Tesla's Q1 U.S. EV share at around 43%. That's down from 49% for all of last year. So, suggests some erosion there.
Okay. Now, YouTube analysis from Ricky Gutierrez. He had a bull trap warning on the stock. Why?
Yeah, he was basically skeptical of the recent stock surge, suggested it might be a bull trap, maybe pumped up by things like Cathie Wood repeating high price targets.
His argument being nothing fundamental changed.
Exactly. Said short-term pumps can happen without real business growth underneath. He pointed to what he called Tesla's terrible earnings and the fact that full autonomy isn't actually launched for personal use yet, unlike Waymo in Austin.
So, warning about hype versus reality?
Pretty much. Cautioned about overbought conditions, risk-reward. Highlighted that the core business isn't growing year over year right now, and guidance for 2025-26 was weak.
Did he mention past patterns?
Yeah, used past examples of Tesla stock pumps followed by pullbacks, advised people not to just follow hype, understand the fundamentals, and also threw in a comment about the fund manager cited having a poor recent track record.
Okay, a cautionary perspective there. Back to the Q&A, there was a question about why more people aren't buying Teslas, given the tech advantage.
Yeah.
What was the thinking there?
Yeah, it's framed as a puzzle. Model 3Y tech is arguably superior in the EV space, but EV penetration is still only around 15%. Why are people still buying BMWs, Mercedes?
And Musk's answer looked further ahead.
Right. He suggested that in an autonomous future, most people might not own cars anyway. He used that flip phone versus smartphone analogy again.
Arguing that focusing on improving non-autonomous gas cars is like perfecting the flip phone.
Basically, yeah. A dead end, in his view. He repeated his prediction. Buying a non-autonomous gas car soon will be like riding a horse while using a flip phone. Obsolete.
Okay. There were also questions about what software improvements are needed for true unsupervised FSD.
Right. They know interventions are still needed in the public FSD builds. The strategy now is focusing hard on Austin, the launch city, to really nail the issues found there.
They have a list.
A big list the team is working through. A key area is redundancy systems to prevent needing a takeover if a computer fails.
So reliability of both the AI and the underlying system.
Exactly. And just working through that long tail of really rare, weird edge cases.
Any specific improvements coming?
He mentioned the Austin version will incorporate audio input listening for sirens, for example. That's not on the current customer versions.
And remote support. Is that needed for safety?
No, they clarified remote support is there for increasing availability, helping with non-critical issues, not required for safe operation.
Got it. Back to Optimus briefly, its future supply chain. Still uncertain.
Yeah, some uncertainty on the final state and tariff impacts there. But they stressed again the huge steps taken to localize the overall Tesla supply chain, and efforts continue to localize more for Optimus and reduce geopolitical risk as it scales up.
Okay. And the initial robo-taxi launch in Austin scale. How many cars?
Initial launch will be small, maybe 10, 20 vehicles, monitored very closely, then rapid scaling after that.
But people should be able to request a ride soon.
Expectation is end of June or maybe July, you'll be able to request an autonomous Tesla ride in Austin via an app.
Right. And FSD pricing. Any thoughts on different tiers for supervised versus unsupervised?
Yes, they're considering multi-tiered pricing. Musk also noted that many current subscribers feel the $99 month is already too cheap, given the personal chauffeur capabilities.
Where's the real value jump in their view?
The key break point is when you can genuinely do other things, read, text, whatever, without the car nagging you. That ability will improve gradually, but once it's fully autonomous, letting you sleep, that $99 subscription will seem incredibly valuable, he suggested.
Makes sense. What about geographic expansion? India came up.
Yep, confirmed they're still working on entering India, called it a very hot market.
Right.
But the big hurdle is tariffs.
How high are they?
Currently, a 70% import tariff plus a 30% luxury tax basically doubles the car's price. So huge potential with India's middle class, but they need to figure out that tariff situation first.
Okay. The vision-only approach for autonomy. How do they handle things like sun glare, fog, dust?
They talked about using direct photon counting with their cameras, bypassing the normal image processor. Claim this lets them drive pretty much straight at the sun without being blinded.
And fog or darkness?
They claim it lets them see really well in dark and fog, too, potentially better than humans.
Interesting tech claim. One more follow-up on the affordable models. Any more specifics on what they'll look like?
Again, the main message was affordability and using existing production lines. That limits the form factor variety.
So likely similar shapes to current Teslas.
Probably resemble current Teslas in general form, yeah. But engineered to be affordable. They stress the intent isn't to make any car worse than past models. Quality focus remains.
Right. Elon Musk's stance on tariffs has seemed to evolve. What's his current position?
He acknowledged he previously argued for gradual tariff ramps, giving industries time to adjust. Said that as one of many advisors to the president, he's made his current opinion clear.
Hoping his advice will be weighed.
Expressed hope the president observes whose predictions turn out right and weighs advice accordingly in the future. He generally favors free trade, lower tariffs.
But exceptions sometimes.
Yeah, but noted you might need to counteract predatory tariffs or huge government subsidies elsewhere on a case-by-case basis. Ultimately, though, stressed, it's the president's decision.
Okay, last Q&A point. Comparing the U.S. and China on physical AI, robots, drones.
On drones, Musk repeated a point that any country unable to make its own drones is vulnerable. Reported China makes about 70% of all drones, almost 100% supply chain control.
Expressed concern about U.S. dependency.
Yeah, concerned the U.S. can't currently build its own drones without Chinese parts. For humanoid robots, he asserted Tesla and SpaceX are #1 globally right now.
But worried about China catching up.
Worried that Chinese companies might dominate ranks 2 through 10 pretty soon.
Okay, so wrapping this all up then, we've dug through the financials, the autonomy progress, robotics, the competitive landscape. Quite a lot.
Definitely. The big picture seems to be, despite some short-term books, the focus is absolutely locked on that AI and sustainable energy future.
Yeah, the vision is clear.
Absolutely. And, it really makes you think, doesn't it? What does a world look like where personal transport, maybe even a lot of factory work, is mostly automated by these AI machines?
What new possibilities open up? What are the challenges we haven't even thought of yet?
Exactly. How does it fundamentally change, well, everything? Our economy, our daily routines? It's kind of mind-boggling to really consider.
It really is. A compelling thought to leave you with. What stood out most to you from this deep dive? Any questions still buzzing around your head about Tesla's future? We'd love for you to share your thoughts and keep exploring these really fascinating topics.
Welcome to the deep dive. Okay, so Tesla stock.
Yeah, it's been making some serious moves lately.
Right, and I know a lot of you listening are probably wondering, does this rally have legs?
It's the big question.
So for this deep dive, we're going to try and unpack what's driving this upward swing and hopefully get a clearer picture based on our sources from around mid-May 2025, of where things might be heading.
Sounds good, because the gains have been, well, pretty impressive recently.
They really have.
Absolutely. I mean, the momentum is really what's caught the eye. As of, May 16th, we saw the price get close to $350 a share.
Wow, $350, that's a big jump.
It is, especially when you think about some of the dips earlier in the year. If you zoom in, it's up over 16% in just the last week alone.
16% in a week.
Yeah, and that's building on like a solid 4-week winning streak.
Yeah.
So the question stands, can it keep going?
Okay, so let's maybe dive into one of the big factors here. The talk about a new pay package for Elon Musk.
Right, the executive compensation.
The old one got thrown out, right? That huge one.
Yeah, the Delaware court invalidated that massive 2018 stock option award, so now the board's, hashing out a new plan.
And how's that playing out with investors? Does it, make them more optimistic?
Well, it really boils down to signaling, I think. For a company that's so tied to its leader, the idea of a new package probably reassures investors. It suggests Musk is committed long-term, that his interests align with the company's future.
Okay, so it suggests stability, future direction?
The market tends to like that, yeah.
Right. And speaking of the future, there's a lot of buzz around the cybercab.
Oh, yeah. The robotaxi.
Tesla's fully autonomous electric vehicle, they're saying. End of June launch.
That's the plan.
Yeah.
And investors see this as a huge potential growth catalyst.
Why is it such a potential game changer for the stock specifically?
Well, think about it. The autonomous vehicle market is expected to be massive.
Huge potential, yeah.
So the cybercab is Tesla basically planting its flag, say we're going to lead this. If it works, the market sees potential for major revenue growth, market share. It's a bet on them dominating this next big thing in tech.
Makes sense. a bet on the future. Now, it's not just Tesla's internal stuff, is it? There are broader things happening, too.
Definitely.
Like the reports about the U.S. and China agreeing to keep tariffs where they are, at least for a bit.
Right, the 10% level for 90 days was the report. And yeah, any sign of stability on the trade front, that's generally good news for global companies.
Especially tech.
Especially tech, yeah. They often have complex global supply chains, global customers.
Yeah.
So avoiding tariff hikes just reduces uncertainty, reduces potential costs. It boosts confidence.
Okay. And then there was that kind of interesting tidbit about Elon Musk traveling with President Trump to the Middle East.
Yeah, the Starlink approval in Saudi Arabia came out of that trip, apparently.
Now, Starlink isn't Tesla, obviously.
Yeah.
But does Musk's overall, I don't know, influence, do these kinds of wins have a sort of halo effect?
It's plausible, you know. It's not a direct financial link to Tesla. But these things can definitely boost the perception of Musk as someone who gets big things done, an innovator. And that narrative, that success story, can sort of indirectly rub off on Tesla in the eyes of some investors. It adds to the overall sentiment.
Okay. Let's switch gears a bit to the technical side. The stock price broke through its 200-day moving average back on May 9th. Why is that a big deal for people watching the charts?
Okay, so think of the 200-day moving average as like a smoothed-out long-term trend line.
Right.
It averages the price over the last 200 trading days. When the current price pushes up through that average, technical analysts often see that as a sign, a signal that the momentum might be shifting upwards, like from bearish to potentially bullish for the longer term.
Got it. And the numbers since the Q1 earnings report, wow, nearly a 40% jump.
It's pretty staggering, yeah.
Yeah.
And leading up to May 14th, there were 6 straight days of gains.
6 days straight.
With a surge of over 26% just in that short window. It hit its highest point since back in February.
So what does that kind of rapid climb tell us? Just strong buying.
It tells us there's really strong buying pressure, yeah. And a big shift in market sentiment. Investors were clearly reacting well to all these catalysts we're talking about, and sometimes, you know, momentum just feeds on itself.
Attracts more buyers.
Exactly.
Okay. We also heard Chipotle's CEO joined Tesla's board. That seemed a little different, bringing in someone from outside auto or tech.
It did raise some eyebrows, but it could be seen positively. Maybe bringing in diverse experience, especially around scaling operations, supply chains, customer experience.
Things Chipotle does well.
Exactly. Areas where a successful consumer CEO might offer, you know, valuable insights as Tesla grows.
Okay. And one last point on the positive side, that Korean ETF, the one focused on Tesla's value chain.
Oh, yes, the ACE, Tesla Value Chain Active.
It saw the biggest gains among domestic Korean ETFs recently, apparently.
Yeah, excluding leveraged products, it was up like 14.60% in a week. Which is noteworthy because it shows this positive feeling isn't just U.S.-based.
Right. International investors are feeling confident, too.
Seems that way. Confidence in Tesla and maybe the whole ecosystem around it.
Okay, so we've laid out a pretty strong case for the recent rally. Lots of positive factors. But, you know, we need the balanced view. What about the other side? What are the risks, the potential headwinds that could push the stock back down?
Absolutely crucial. Because despite the stock's run, we can't forget the Q1 2025 earnings report.
Which wasn't great, right?
No. It showed a year-over-year drop in both sales volume and net profit. And that's fundamental. Declining sales, declining profits.
Yeah.
If that continues, it could really start to weigh on the stock.
Because eventually the stock price needs the financials to back it up.
Precisely.
Yeah.
You need strong results to support a strong valuation long term.
Okay, that makes sense. Anything else on the risk side we should keep in mind?
Well, there are also some, let's say, emerging political headwinds. We're seeing opposition movements like Tesla takedown pop up related to Elon Musk's political activities. Now, the direct impact is really hard to measure, but if these things start to negatively affect Tesla's brand image.
It could potentially hit sales down the line.
Potentially, yeah. It's a risk factor to watch.
Oh.
Brand perception matters.
Okay, important points. So with all this in mind, when we look at what analysts are saying about the future, say, end of 2025, it sounds like there are some pretty big disagreements.
Oh, definitely. You've got quite a spread in opinions right now.
So what's the optimistic view? Where did the bulls see this going?
Some of the more bullish analysts are talking about Tesla stock reaching $500 by the end of 2025.
$500, that's quite an increase from $350, about 43% upside.
It is, and that view likely hinges heavily on the Cybercab launch being a big success, scaling quickly, and probably assumes market sentiment stays positive and maybe profitability turns around.
Okay, and then on the other side of the coin? What are the more cautious analysts worried about? Why are some lowering targets?
They're focusing mainly on those risks we just talked about. The potential for sales to keep declining, maybe the impact of those political headwinds on the brand.
They're weighing those more heavily.
Right. They might also just be waiting for more proof points, like seeing how the cybercab actually performs in the real world before getting more optimistic. Or they might just feel the recent run-up got ahead of the fundamentals.
Which brings us right back to that cybercab launch in Austin. It really feels like a make-or-break moment almost.
It feels pretty pivotal, yeah. It's a high-stakes event for sure.
Could validate the bulls. Or
Yes.
give the bears more ammunition.
Exactly. A smooth rollout, showing the tech works, showing people want it, that could be a massive catalyst.
Yeah.
But any significant problems, technical glitches, regulatory hurdles, bad public reaction, that could really put a damper on things. It could force a rethink of those future growth expectations.
So the overall picture, looking ahead, it seems like a real tug of war. Exciting potential versus some pretty real challenges.
That sums it up pretty well. It's definitely not a simple, straightforward story.
No.
And while this recent trend is up, which is encouraging if you're an investor, it's worth remembering the stock is still, about 13% lower than where it started the year?
Good point. Still down year to date despite the rally.
Right. So key things to watch. Definitely the cybercab progress, the autonomous driving service rollout, public reception. And can Tesla turn those sales and profit numbers around? That's huge.
And the compensation package details once we get them.
Yes. That will tell us more about leadership incentives and alignment with shareholders.
Okay, so let's try and wrap this up. Tesla's stock has been on a tear recently, fueled by things like hope around a new Musk pay deal, big excitement for the cybercab robo-taxi, and maybe some helpful market conditions.
But you have to balance that against challenges like falling sales in Q1 and those potential political risks we mentioned.
Yeah.
Which explains why analysts are kind of all over the map on where it goes next.
Absolutely.
So maybe a final thought for you listening. Given all these competing factors, the analyst disagreements, and this really crucial cybercab launch coming up, what indicators will you be watching most closely over the next few months? How do you see the interplay between the tech innovation, the leadership questions, and just the broader market mood shaping Tesla's future?
Following the moves of big investors can feel like getting a bit of a peek behind the curtain, right?
Right.
Hinting at these potential shifts in the market narrative that you might not just see from the headlines.
Exactly. It's like you get a shortcut to understanding what some really experienced people are thinking, not based on what they say necessarily, but where they're actually putting their money.
And today, that's exactly what we're diving into. We're looking at a recent filing from billionaire investor Dan Loeb and his fund, Third Point.
Yeah, specifically their Form 13F. That's for the first quarter of 2025. It's basically a required report for big investment managers.
Right, showing what stocks they held, what they bought, what they sold.
And it's due 45 days after the quarter ends, so May 15th was the deadline for Q1. We're looking at fresh data here.
Okay, so we've got the latest info, and the big headline from Loeb's filing, at least based on the material we looked at, is a really significant pivot.
Yeah, quite striking.
He completely sold off his entire stake in Tesla. Gone. And at the same time, put a lot of money into NVIDIA.
A huge shift. Selling out of a position he'd built up just in the back half of last year, and then, piling into what everyone calls the top AI stock.
So our mission today is basically to unpack that. Try to understand the potential reasons why, based strictly on what our sources tell us about these moves and what it might signal about the stories around Tesla and NVIDIA right now.
Okay, let's get into it.
All right, so starting with Tesla. He didn't just trim it, he dumped the whole thing 500,000 shares, and he'd only just built that position in Q3 and Q4 of 2024. So why the quick exit? What do the sources suggest?
Well, a few potential reasons pop up in the material. One, maybe the simplest explanation is just taking profits.
Okay.
The sources mentioned Tesla's stock had a pretty big run recently, even doubled briefly after some political news. And Loeb's average hold time, according to this info, it's about 13 months. So maybe he just decided to lock in the games.
Plausible, a tactical move. But the sources dig deeper too, right? Beyond just cashing in. There's talk about Elon Musk's focus potentially being stretched a bit thin.
Yeah, spread across multiple ventures. They even mention this role, a special government employee for Department of Government Efficiency. The implication being maybe less focus on Tesla itself.
Interesting. And then there are the concerns about Tesla's actual core business, the EVs.
Right. The sources point to signs of strain there. Like EV revenue dropped 20% in Q1 2025 compared to Q1 2024.
Wow, 20% year over year. That's pretty steep.
It is. And adding to that, vehicle margins, how much profit they make per car, have apparently been trending down for 2 years.
2 years? Why?
Attributed to price cuts. Maybe needed because competition's heating up, or maybe overall EV demand is softening a bit. Either way, it seems to be leading to higher inventory.
Okay, and here's something I found really striking in the sources regarding the financials. They talked about the quality of Tesla's earnings.
Ah, yes. The regulatory credits and interest income point.
Exactly. Highlighting that over half of the pre-tax income in that March quarter didn't actually come from building and selling cars. It came from these automotive regulatory credits.
Which they get essentially for free and can sell to other car makers.
Yeah, and interest income.
Right. And the implication drawn in the sources is pretty stark. Take those away, and the core business, selling cars, would have actually reported a pre-tax loss.
That definitely paints a different picture of the underlying health, doesn't it? If the main business isn't profitable on its own, that's a potential red flag for some investors.
For sure, especially those focused on fundamentals. And then there's the final piece mentioned, the unfulfilled promises.
Right, like level 5 full self-driving being supposedly 1 year away for, 11 years now.
And robotaxi targets from 2019 that haven't happened, Cybertruck demand maybe not meeting the initial hype, things like that.
So if your investment case relies heavily on those future breakthroughs and they keep getting pushed out.
Exactly. You can erode confidence. Makes the current valuation, which might have those future hopes baked in, seem a bit shaky.
Okay, so that lays out a pretty clear picture from the sources on why Loeb might have sold Tesla. Core business challenges, maybe some execution concerns. Now, let's flip to the other side of the trade. NVIDIA.
The big buy.
Yeah, while selling Tesla, he scooped up 1,450,000 shares of NVIDIA in Q1, worth around $196 million, the sources said. And he'd traded out of it before, so this is a re-entry.
And it's such a contrast in the narratives presented in the sources, right?
Yeah.
NVIDIA is consistently described as, like, Wall Street's preeminent AI stock.
The main beneficiary.
Pretty much the most direct way to play the whole AI revolution that's happening.
And the sources pinpoint why. It's about their hardware, isn't it? The GPUs, Hopper, and now Blackwell?
Yes. Seen as the essential brains for all this stuff. AI data centers, generative AI, training those huge large language models, the LLMs. They're the preferred choice.
And there's this dynamic of scarcity, too.
Big time. The sources emphasize that demand for these top-tier AI chips is just overwhelming supply right now, even with manufacturing trying to catch up.
Which lets NVIDIA command premium prices?
Exactly. And that flows right through to their gross margins, which are really high.
So they've got the key hardware and can charge top dollar because everyone needs it. But the sources also mention something else beyond just the chips. The CUDA software platform.
Ah, CUDA. Yes, that's crucial. It's described as this software toolkit that helps developers really get the most out of NVIDIA's GPUs, build LLMs, other AI applications.
And the sources called it an anchoring tool. What does that mean, practically?
It basically means it creates lock-in. It's a sticky ecosystem. Once companies and developers invest all this time and effort building on CUDA,
they're less likely to switch to a competitor's hardware.
Precisely. Switching becomes really difficult and expensive. It builds a strong moat around NVIDIA's business. It's not just selling hardware, it's building this whole world around it.
Okay, got it. So powerful hardware, pricing power, and a sticky software ecosystem. The sources also mentioned valuation briefly.
Yeah, they noted its forward PE ratio, price to earnings, dipped to around 19 near the end of March, which, given NVIDIA's crazy growth rate,
looked potentially quite inexpensive.
Right. For a growth investor, that combination, market dominance, pricing power, ecosystem, maybe an attractive valuation relative to that growth that looked pretty compelling based on the source material.
Okay, so now let's try and connect these dots. Loeb exits Tesla, dives into NVIDIA, but we need to remember, as the other sources point out, not everyone is selling Tesla. The bull case is still alive for some.
Definitely true. And those sources acknowledge something important. If you just look at Tesla as a car company, using traditional metrics like EV/EBITDA compared to, say, Alphabet,
it looks ridiculously overvalued.
Yeah, it doesn't add up.
Yeah.
Which really tells you the bull case isn't primarily about selling cars today.
It's almost entirely about the future potential, isn't it? Specifically, robotaxis. One source even cited an analyst model where robotaxis made up like 88% of the potential value way out in 2029.
That really highlights how speculative it is.
Yeah.
Management confirmed unsupervised FSD on Model Ys in Austin.
Yeah.
Talked about cybercab production starting in 2026. But the sources rightly point out there are still huge questions.
Scalability, regulations, can they actually execute on this massive vision?
Right. They even mention Musk himself, joking about being the boy who cried FSD, after saying it's just around the corner for so many years.
Yeah, that history doesn't help build confidence. But, okay, the sources do provide some counterpoints, reasons for optimism for the bulls.
They do. Tesla is the established EV leader. They have scale, which helps with costs. And interestingly, competitors like Ford and GM are actually pulling back on their own robotaxi projects. GM apparently saving $1 billion a year by doing so.
So less competition maybe, and then there's Waymo.
Right. Waymo, Alphabet's company, kind of proves the concept works, right? That people use robotaxis. It's technically possible, commercially viable in some places.
And the argument is maybe Tesla has cost advantages or just way more driving data than anyone else.
Potentially. So you have this real tension, Loeb focusing on current issues and maybe past execution misses, while the bulls are betting on this massive, speculative but potentially game-changing future tech.
And we should also touch on the risks for NVIDIA, mentioned in the sources. It's not all smooth sailing forever, presumably.
No, definitely not. The sources bring up the historical pattern. These next big thing technologies often have a hype cycle, sometimes followed by a bubble bursting.
That's always a risk. And what about actual adoption?
Yeah. The sources point out that while companies are buying the hardware, many might not have a clear AI strategy yet, or aren't actually seeing big profits from AI today.
Suggesting investor expectations might be running a bit ahead of the real-world results so far.
Could be. And then there's competition. As others develop their own chips or more manufacturing comes online, that GPU scarcity could lessen.
Which could hit NVIDIA's pricing power and those amazing margins eventually.
Down the line, potentially, yes.
So for you listening, what does all this mean? Seeing a big name like Dan Loeb make these kinds of sharp moves, it really throws into relief the different ways people are valuing companies right now.
It's a perfect example, really. Weighing the tangible stuff, current business performance, immediate challenges against the more speculative promise of future tech and market shifts.
It's this fascinating tug-of-war playing out with billions of dollars.
Absolutely. And these 13F filings, they're like a little window into how some very smart investors are trying to navigate that uncertainty.
So to sum up, Loeb gets out of Tesla, maybe seeing near-term headwinds and execution risk while jumping into NVIDIA, the clear AI infrastructure leader for now. But the Tesla bull case, as the sources show, still hinges on that potentially huge but unproven robotaxi future.
While NVIDIA, despite its dominance, faces its own risks around hype cycles, real-world adoption translating to profits, and eventual competition.
It's complex, driven by totally different bets on what matters more, today's reality or tomorrow's potential.
Exactly. So the final thought maybe for you is, look, what does it really signal when big money makes these sharp pivots? And maybe more importantly, how do you personally weigh that tangible reality of a company now versus the speculative promise of what it might become?
Definitely something to mull over.
Okay, welcome to the deep dive. We're diving straight into your source material today. Specifically, a stack of articles and analysis focused right on Tesla stock. TSLA covering that week of May 24th through May 31st, 2025.
That's right. Think of this as, well, a custom shortcut based on what you sent over.
Exactly.
Our goal, to quickly pull out the key bits of info, cut through the noise, see what might be driving the stock, and maybe most importantly, understand what your sources suggest about potential investment strategies.
Short, medium, long term.
Exactly. Whether you're looking short, medium, or long term. Let's unpack this.
Absolutely. And this particular week, it really seems to paint an interesting picture, doesn't it? Like mixing some big future ideas with some very present-day challenges.
Definitely.
So what did your sources highlight first about the stock's actual movement during that period?
Okay, so zeroing in on those dates, your sources note Tesla had a pretty strong May overall. Yeah, reportedly up over 22% for the month. Now, that's even though it was still down year to date, maybe, 10 to 14% down?
Right. Still in the red for the year.
And by the end of that specific week, the price was hovering around $346 a share.
Got it. So a recent bounce back, at least in May, what were the sources pointing to as, possible reasons for that?
Well, One key piece that got flagged was the news around Elon Musk.
Okay.
Specifically, him announcing he was stepping back from a U.S. government role to focus more on his core companies, Tesla included, obviously.
And did the sources say that actually moved the needle?
One source specifically noted the stock jumped like over 2% just on that announcement.
Okay, so the thinking there, according to that source anyway, was more Musk time equals good for Tesla investors. Is that the idea?
That was one interpretation, yeah. Suggesting, improved sentiment, maybe signaled more focus on execution, marketing the big plans.
And speaking of those big plans, robotaxi. That's still a huge theme in these sources, right?
Oh, absolutely. Musk is still talking about a launch happening soon. I think the aim mentioned was end of June.
Yeah, starting small, maybe, like Austin.
Potentially starting small scale in Austin. That potential launch is definitely framed as a possible short-term catalyst in one analysis you shared.
Okay, but I sense a but coming.
Well, yeah. This is where another source throws in a really crucial bit of contrast. While Tesla is talking about launching robotaxis soon, this source points out that Tesla isn't actually the leader in autonomous driving right now.
Really? Okay, so who did the sources say is ahead then?
Waymo. Part of Alphabet, Google's parent company.
Ah, right, Waymo.
Yeah. Your sources highlight Waymo's been offering paid, genuinely driverless rides since, 2022.
Since 2022, wow.
And they're seen as much further along in the autonomy level. Waymo's operating at level 4, fully driverless in certain areas. Tesla's autopilot and FSD, still considered level 2, meaning, you need active driver supervision.
So hang on. Waymo's already doing hundreds of thousands of driverless rides every week. And Tesla's plan is maybe starting with 10 cars soon.
That's the contrast the sources draw, yeah. It's pretty stark when you put it like that.
It really is.
And the challenge that gets flagged is this. For Tesla to hit some of those, frankly, incredible future price targets, the Cathie Wood $2,600 prediction relies heavily on robotaxi.
Right.
They need to scale that service massively and super quickly.
But that's hard if they're behind on the tech.
Exactly. Achieving that rapid, large-scale rollout is directly challenged by being, behind Waymo on the core tech. Plus, you have potential regulatory hurdles, liability stuff. One source kind of suggests Waymo's slower, maybe more cautious expansion might actually be the more realistic path, making those super aggressive Tesla timelines feel ambitious.
Okay, so that's the future hype versus the current autonomous race reality.
Yeah.
What about the here and now, the core business? Your sources hit on that too, right?
They did. A really significant point across the board was the ongoing struggle with vehicle sales, particularly in Europe.
Yeah. I saw some numbers there. What did they say exactly?
One source reported Tesla's sales in Europe fell 49% year over year in April.
49%?
Yeah. And another cited new registrations down even more, like 53% in the EU, which, really hammered Tesla's market share over there.
And the kicker is, your sources point out this is happening while the overall EV market in Europe is actually growing.
It is. That contrast is, it couldn't be much sharper.
So why the drop? What are the sources saying?
Well, they attribute it partly to what they call brand damage, maybe linked to Musk's political activities.
Okay.
And partly just competitive disadvantages. I mean, Tesla hasn't rolled out many truly new models in a while, right?
That's true. Model 3 and Y are getting older.
Exactly. Meanwhile, competitors, especially from China, are launching newer stuff, often cheaper alternatives, and people are buying them.
So sticking with those older models helped profits for a bit, maybe. But now it's catching up with them on sales volume.
That's the trade-off one analysis highlights, yeah. And you can see the impact on the financials in those Q1 2025 numbers the sources reference.
Right, they weren't pretty.
No. Revenue dropped 13%, net income plunged, 71%? And the operating margin in the car part of the business also fell quite a bit. One source raises a pretty key concern here.
Which is?
If these sales declines keep accelerating, those operating margins could get, dangerously close to zero. Or even negative.
And why is that specific margin point so critical? Beyond just, making less money?
Because it directly hits Tesla's ability to fund all that massive R&D and capital spending needed for the future stuff.
The robotaxi, the Optimus robots.
Exactly, all that exciting future vision. Even with a big pile of cash, if your core business isn't generating healthy margins, funding that super ambitious future becomes much, much harder. That's the concern raised in the analysis.
Okay, so that is a complex picture from your sources. You've got a stock that saw a recent bump, maybe on CEO-focused news, definitely on future hype like robotaxi. But it's wrestling with really significant current problems, falling sales, tough competition, and real questions about how fast and realistically they can deploy the future tech.
That sums it up pretty well.
So, given this whole mix, what did the sources actually suggest you, the listener, should maybe consider regarding investment strategies?
Right. How do you navigate these competing signals? And it's interesting because the two main analyses you shared, they actually offer slightly different takes, especially on the short term.
Okay, let's hear them. What did the first analysis say?
Okay, source analysis 1 presented this kind of view. For the short term, like within a month, it recommended sell or watch. Basically, hold off.
Why?
The reasoning was that the negative stuff, the poor recent results, the falling European sales, those were the dominant factors right now, suggesting the price was more likely to drop near term. So be conservative.
Okay, cautious short term. What about medium term?
For the medium term, say 3 to 6 months out, it recommended watch. Just observed.
Still cautious.
Yeah. The idea was you need to wait and see if any positives like Musk's focus actually translating to something, or news on new car platforms could start to outweigh the bad news and actually show up in improved performance.
Makes sense. And long term?
Long term, looking out 6 months or more, it recommended consider buy.
Okay. More positive there.
Right. The thinking here was more optimistic about long-term price increases, expecting those new vehicle platforms and, eventual autonomous tech advancements to drive growth, seeing that long-term potential despite the current headwinds.
Okay, so source 1. Cautious now, wait and see medium term, consider buying for the long haul. Got it. How about the other source? Did it agree?
Well, source analysis 2 took a noticeably different angle, especially short term.
Oh, how so?
For the short term, 1 to 3 months, it recommended buy or hold.
Buy or hold.
Yeah.
That's quite different from sell or watch.
It is. This view seemed to put more weight on those expected short-term catalysts. The potential robotaxi launch announcement buzz, the positive feeling from the Musk-focused news.
So leaning into the hype a bit more.
It seems that way. It even suggested maybe taking some profit if the stock saw another quick surge.
Interesting. Okay, what about their medium-term view?
For the medium term, 3 to 12 months, it recommended hold or split buy.
Split buy, meaning buying in chunks.
Exactly, buying in increments. This view also stressed watching for actual performance recovery, seeing if new products actually succeed, but it explicitly acknowledged the risk from competition and suggested using split buying to kind of manage that risk.
Okay. And long-term for source 2?
Long-term, looking out a year or more, it also recommended buy or hold or head.
So similar to the first source on the long-term then?
Broadly, yes. Positive on Tesla's long-term potential, pointing to things like its U.S. market position, tech, brand value, those future growth drivers, autonomy, robots, energy. But it also specifically cautioned investors must watch out for competition and, expect performance ups and downs.
Wow, okay. That is a significant difference in the short-term advice. Sell or watch versus buy or hold based on the same week's news. That really highlights the debate around this stock.
It really does. It's fascinating, isn't it, how two different analyses can look at largely the same set of facts from that specific week and arrive at such different immediate conclusions. One seems to really zero in on the current fundamental challenges, sales, financial.
What's happening now?
Right. While the other gives more weight to potential future catalysts and maybe the prevailing investor mood, which is often driven by hype and, Musk's actions.
It definitely feels like Tesla is a stock where, as one source kind of hinted, the price often seems really influenced by belief. Belief in the future story, the marketing, maybe sometimes even more than the day-to-day nuts and bolts of selling cars right now.
That tension, today's reality versus tomorrow's dream, that's absolutely central to the whole narrative your sources are grappling with. And it seems both analyses fundamentally agree the long-term story around AI, autonomy, robots, energy. That's the key potential driver, even if they disagree on how quickly it happens or how big the hurdles are.
Right. It's notable they both leaned more positive long-term.
It is. But importantly, both also included those big caveats. You need to see execution. You need to watch the competition. It's not a blind buy recommendation from either, even long-term.
Okay, so pulling it all together from the sources you shared covering that specific week in late May 2025, we see Tesla getting a lift from sort of future hope and maybe renewed leader focus.
Right.
But at the same time, facing some pretty serious headwinds in the actual car business right now and some, let's say, reality checks in the autonomous race.
Yeah, and the investment strategies that flow from that, they range from being pretty cautious or even selling in the immediate short term focusing on current performance,
like source 1.
to a view that maybe leans into those short-term catalysts and suggests holding or buying, like source 2.
Right.
Then looking medium-term, it's more about waiting for proof or managing risk. And longer term, generally more optimistic based on the big vision, but always with that asterisk about competition and needing to see results.
It really is quite the puzzle to navigate, isn't it? Balancing those current struggles against the potential for truly transformative tech that might still be years away.
It absolutely is. And, that leaves us with maybe a final thought for you, the listener, to chew on based purely on these sources. When you look at a company like this, with one foot seemingly stuck in today's tough market challenges and the other leaping towards a revolutionary, maybe distant future, how do you decide which one weighs more heavily in your own investment thinking?